What's going on, guys? I was doing some charting for tomorrow's session, tomorrow being July the 28th, and I was looking at Friday's price action, and yet again, something, really stands out to me, and I have to share it with you guys because I think if you guys aren't utilizing this daily level, you're doing a disservice to yourself. This daily level puts you on the right trade so many times. And the daily level that we're looking at is the daily 5 SMA. Okay. And that's that lime green line that you see. Okay. So this line right here, this line right here, this line right here. This is the daily 5 simple moving average. So I have this plotted on the chart. It's going to carry over each and every single day. And I like looking at it like this. Whoever controls the daily 5 intraday typically controls the day's price action. Now, what does that mean? For many of you guys who are looking to stay on the right side of the trend or looking to maybe trade bigger moves, trending moves, you want to stay on the right side of the trend. And more times than not, when price action is trading over its daily 5 simple moving average, you can generally look for trades in that direction. Now, what we're looking at here is a 1 hour time frame, and you're going to see here that the first hour candle of the day, so 30 minutes pre-market and then 30 minutes off the open, not only do we have an aggressive sell-off where we kind of sweep the pre-market low, we sweep that prior swing low, we dip down, but we have an even more aggressive reversal. Okay, so it's a lot of times right here on this wick within this hour range where a lot of traders, the main thing that's sticking out to them is, oh my gosh, off the open, off the pre-market, we just sold off hard. So this bounce can't be trusted. I need to go short. I need to go short. I've got to go short. And you're constantly looking to go short on an upwards trending day. When realistically, if you watch this thrust itself and lose this daily 5 and then reclaim this level, all you have to tell yourself is keep it stupid simple. Are we trading over under the daily 5? That, use that as your gauge. Use that as your indicator. Use that as your indicator to say, if we're trading over this level, I don't have to do nothing in terms of looking for shorts. I just need to look for longs. So let's actually get into like a 5-minute time frame here, right? Let's get into a 5-minute time frame and let's find when exactly we reclaim that daily 5, and let's look for examples of trades that we could have taken long only when we reclaim that daily 5. So we lose the daily 5, right? We don't close below it yet, but we break the daily 5. We finally get a closure below, and then boom, at 6:40, literally 10 minutes off the open, we reclaim this daily level. There's the closure above. You can do something in terms of, here's my my low of day, right? Here's my low of day. Here's my closure over this entire range here, right? Let me get a box. This entire range can be used as a stop loss. Okay, telling yourselves that I can get long here, and as long as we don't close below the daily 5 and take out the daily low, I can stay long. And essentially you would have caught this trade from the bottom. Now, again, that sounds great, right? That sounds great. Not a lot of us are going to be able to catch it, and not a lot of us are going to trust that move. I get it. I understand it. I don't catch moves that last all day, but at least it gives you a scalp. You can definitely take a scalp here once you reclaim that daily 5, try to shoot long for 10 points, 15 points. Here's another setup. My setup. This is my strategy that I use each and every single day. The 20 SMA strategy, looking for price action changes and shifts, closures over under the 20 SMA. Well, at 6:45, we get a candle that closes back over its 20 SMA. So that's checkbox number 1. What's checkbox number 2? Are we over the daily 5 or are we underneath the daily 5? Well, in this case, we're over the daily 5. So there's checkbox number 2. Let's enter this trade long. You can use the entirety of this candle as a stop loss, which was 23 points. You can use a closure below the 20 SMA as a stop loss. You can kind of play around with that stop loss and position sizes. The next setup that I really see here is, once we kind of hit this linear regression line, we kind of, tap it, and then we kind of fall back a little bit, right? But we fall right back into our rising 20 SMA. Well, isn't this a pullback into support? And isn't this a little bit of a flag pattern there, right? Let's adjust this a little bit. If we take this high and we drag this across to all these other recent highs, wouldn't we say that this is a little bit of a flag? Pulls back right into support, breaks the flag, here's another scalp, right? So this was more money that could have been made simply going long. Here's your first trade long, money to be made going long. Here's your first trade long, reclaiming the daily 5, 3 trades, 3 for 3, all going long. Very interesting, right? Here's another pullback. Here's a high followed by a 3 candle pullback into support. Here's another flag pattern. That's also a 2-in-1. Not only is it a flag pattern, but it's also a 20 SMA. And this is also a great position long. Well, here's your high of day, right? Here's another setup, going long only. Here's your high of day. High of day gets broken. High of day gets confirmed. Well, there's another long position. So think about that for a second. Going into lunchtime, we got presented with about 4 to 5 trades. Even if you scalp, taking 5 points here, 10 points there. I mean, this is 5 trades where they all would have worked out. That's all going in one direction, all by using one simple indicator. That's the daily 5 SMA. The daily 5 SMA rules above all on the intraday trading. If you're above the daily 5, you are looking for longs. You are not looking for shorts. Now, can one say, well, what about this inverse hammer candle here? Couldn't I have gone short at the high of day? Yeah, sure. But who's to say that it was going to pull back and not rip? Who's to say that it wasn't going to pull back and rip, right? We don't know that. We don't know that. But sure, yeah, could you have? But why take on that added stress? Why not just stay in one direction? And why not just take 10 points here, 10 points there, 10 points here, 10 points here? I mean, guys, that's 40, 50 points. You start extracting 40 or 50 points from the market each and every single day, and you're making a really, really good living for yourself. Guys, Apex evaluations are 90% off. Try using the daily 5 in this manner. Go load up on Apex evaluations using code DAnthony. Try this out. Come back in a week. Let me know how it treated you. Also, if you just want to trade with us inside the room at Evolution Traders, get access to my courses, access to the live trading, access to a bunch of other educational videos and strategies and risk management tools that I use, you can join Evolution Traders right now for 50% off. That link is down in the description box below. I will see all of you guys on the next video.